In this video, I'm going to talk about the 7 government changes that could make me up to $503 a week. And for each of these, I'm going to talk about what each of the changes are and if you can get these benefits too. Now, Jacinda Ardern, she won a massive victory in 2020, and then Jacinda's Labour Party, they introduced lots of new rules and new taxes for property investors. And then her party and who got booted out 3 years later by this guy who apparently used to run an airline, and I've decided to change the rules. Hey friends, welcome back to the channel. I'm Ed, an economist and property investor here at Opus Partners. And whenever I'm speaking on the TV, the radio, or writing for the New Zealand Herald, people often ask me, can you please just explain to me what the government is doing in really simple terms? Because often the government talks about things in hundreds of millions or even billions of dollars, and it's hard to know what it actually means for regular people like you and me. So I wanted to challenge myself to see if I could break down all of the government's changes into a simple weekly amount so you can see how all of these rules might impact you too. Now, this isn't to be all political, to tell you who's better, who to vote for. You support who you want to support. This is just to explain the new rules and the impact on property investors as simply and as honestly as I possibly can. Change number 1 will give me an extra $20 a week, and it's the income tax changes that came in at the end of July. So I get an extra $20 a week, and so does my partner, and since we're a team, that's $40 extra that we'll have together per week. Now, not everyone gets the same amount of tax cut. If you're on a smaller income, for example, you don't get as much of a tax cut because you're not paying as much tax, and once you earn over $78,100, pretty much everyone roughly gets the same $20 a week per person. And you can actually use this calculator to check how much you personally get. The link is down in the description. Now, number 2 is the government getting rid of the special taxes for property investors. And this is big. So back in 2021, Jacinda Ardern, she brought in a new rule that basically said, if you're a property investor, you've got to pay tax like you don't have a mortgage. Now, let me show you what that means. Let's imagine that you're a property investor and you don't have a mortgage, which is usually your biggest expense. How profitable is your rental property? It's going to be really profitable because your mortgage, as I said, that's your biggest cost. If you don't have one, your property is really profitable. And since you have no mortgage and your property is profitable, you pay lots of tax, which sounds fair. But now imagine that you own that rental property and you're paying lots of tax, but then you have a big mortgage too. Well, that's pretty much what that rule did. And a lot of investors were losing money on their properties because interest rates were high, and then they're also paying a lot of tax on top of that. Well, the new government is coming in and wiping that rule away, and it's actually going to save me $158 in tax a week. That's just on one of my investment properties. And I'm actually a bit lucky because I've invested in a lot of newly built properties recently to try and grow the housing supply because, well, we have a housing crisis in New Zealand. And these new builds had special rules, so I didn't actually have to pay the full tax on all of my investment properties. If I did, this policy would actually make me $659 a week better off. So for some property investors, this will make a huge difference. Of all the government's rules, this is the one I get asked most about. It's New Zealand's version of a capital gains tax, and it's called the Bright Line test. And while we don't officially have a capital gains tax here in New Zealand, that doesn't mean that all capital gains are tax-free. So let's say you bought the average house in Christchurch as an investment property back in 2020. Well, you would have paid around 514 grand for that. Zoom forward to today, and that house could be worth $762,000, 248k more. Now, if you sold that under the old Bright Line rules, you might have paid over $82,000 to the IRD. But the government just changed the rules, and it means you could now sell that property tax-free if you owned it for 2 years or more. And because of the way the IRD calculates the tax, this would technically save you $1,579 a week for that year in this scenario. Now, I'm not going to count that for myself because I'm not interested in selling any of my properties, but some people are going to save a lot of money. And if you've got questions about the Bright Line test or any government policy, I'd really appreciate it if you hit the subscribe button to see my future videos. I'm really trying to grow the channel to 20,000 subscribers. The government is also about to make it easier to borrow money, so it'll soon be easier to buy your first home or an investment property. So do you remember how a couple of years ago there were all of these articles and they were talking about how banks wouldn't give you a mortgage if you spent too much on like Uber Eats, Kmart or coffee? Well, this is often called the CCCFA, and the government is about to rewrite the rules. Now, here's the impact it's already having. So Westpac, they've just changed the calculations around how much mortgage you can get. And if you want all of the nerdy details, I'm actually about to release a podcast on this on the Property Academy podcast, so go check that out. But by my estimates, this will let me personally borrow an extra $192,000 for investment properties. Now, I probably can't buy an investment property with only 192 grand, but that extra boost, that will help me buy a better investment property. That better investment property will probably get more rent, and that extra 192 grand that I can go and spend on an investment property, that should turn into at least $166 in extra rent per week for that property. And if that property goes up in value by, let's call it 5% a year, which the Reserve Bank says is kind of the long-term average, that extra mortgage I get from the rule change, that might give me an additional $185 a week in capital growth. Now, there's an argument about how you measure all of this, but just to keep things simple, I'm going to call it $185 a week. And I can already hear the typing in the comments, people saying you're just a grubby property investor. And Ed, you really shouldn't be celebrating making money when some people are legitimately struggling to even find a house to rent. And I'm really glad that you brought this up, because this is an important point. Because remember, this is a pro property investor YouTube channel. My business, Opus Partners, we help people invest in property and grow a property portfolio. And as part of that, it's my job to tell you what the rules and yes, the opportunities are for property investors. Now, if you watch this video and you don't think that these rules are right, you are absolutely justified in feeling that way. And if this video inspires you to write to your local MP and say, this isn't right, the government should change the rules back, then that is a legitimate response to this video. But if this video instead inspires you to say, hey, you know what? Property investment seemed a bit hard to me before, but now I might give it a go. That is also a legitimate response. These are the real facts, these are the real numbers. Whether you view it as an opportunity or something you want to oppose, that's up to you. And if you have a strong feeling either way, let me know about it down in the comments. And you might also say to me, Ed, what about the DTIs? Now, those are the new mortgage rules that could stop you from buying a house. And they tie the amount that you can borrow to your income. And it really does mean that over time, you might not be able to borrow as much. So you might think, well, shouldn't that number that we're tracking, shouldn't it decrease the amount that the government's changes are going to make me by $100, $200, or even $300 less a week because I can't borrow as much compared to the old rules, so maybe you can't buy as many investment properties. Now, usually I'd agree with this, but because I invest in new build properties, the rules won't apply, so I can actually ignore them. But even if you don't buy new builds, these rules won't impact you straight away. And that's because up to 20% of each bank's lending can be outside of these rules. And at the moment, we're tracking it like 10%. So it's basically like driving a car 50K and a 100K speed limit. There's room to speed up and still not be breaking the rules. And don't forget that if you want to invest in new build properties too, you can always check out my company, Opus Partners. We help regular Kiwis grow their wealth through new build investment properties. Next up, the government is changing the rules and they want to make it way easier to build a small house in your backyard. You can then rent this out or move your family in. And this is actually a pretty big change. It means that you can build a granny flat or minor dwelling without talking much to your local council. No building consent, no resource consent needed. And that should make it about 5 to 10% cheaper and mean you can build a granny flat up to 8 weeks faster. So if the council wouldn't let you build a small house in your backyard before, maybe you soon can. And if you spend $200 to $300K to build that 2-bedroom granny flat, you might rent it out for, let's call it $500 to $600 a week, depending on where you live. Now, I personally won't be using this strategy because I don't own a lot of houses with big backyards. I've more been investing in townhouses, but some investors will make good money from this. And the last change number 7, actually comes from the Reserve Bank. And you might not think that the Reserve Bank is part of government, but they have been 100% owned by the government since 1936. Now, they initially raised interest rates to try and get inflation down, and now they're changing their direction. Over the next few months, chances are they'll drop their interest rate, and this change in direction is already lowering the interest rates that you and I pay on our mortgages. It's already getting cheaper. So the banks have dropped quite a few of their interest rates, and Westpac has dropped their 1-year rate 4 times this year already. That's 0.5% down since the start of the year, with likely more to come. Now, the amount that this saves you depends on how much debt you've got, but I estimate that this will save me personally $120 a week for every 0.5% drop. Now, add it all up, and depending on if you're a current or future property investor, these 7 government changes could save you at least $503 a week.